Hello and welcome to LedgerCast. My name is Brian Crossguard here with the one and only Josh Olswich. Hey, Josh.
Mr. Brian, good to be with you today.
Great to be with you, sir.
I can't help, by the way, just seeing your face and just being happy. I don't know why.
Well, I'm glad.
It is what it is.
I can't see your face, but I'm still happy to talk to you. I'm also encouraged. Look at that. Here comes the face.
We'll see if I freeze or not on the stream. Yeah. For those of you not joining us on the stream, you should. When we decide to randomly stream, usually it's every week around 1 EST.
Yeah. Here we are today. Look at this.
I'm chilling like a villain. See, I just lost you for some reason.
No, I minimized the wrong one because I wanted the chat to have this side by side. This is a unique experience here.
By the way, if there's any trading glove companies who want to sponsor this podcast, it's almost trading glove season.
Trading glove companies, as you know, very common business.
Very niche, very niche. I know.
Yeah. I'm gonna tweet this stream because I forgot to. But Josh, tell me about what's going on. What are you thinking? And I will put the screen share back on so you don't feel awkward.
Things are slowly starting to turn the corner. I don't know. You know, on-chain data still looks iffy as in activity. Activity is still flat, down, you know, not great. But when we're talking about like just general sentiment, I think people are getting sick of pushing the red button. That's what it feels like to me.
They're
also, importantly, we are decoupling more and more away from NASDAQ stuff because look at Amazon, look at Apple, look at all these, look at Meta. Like, what a week it's been for them. And Bitcoin's like, yeah, whatever. Like, we're going up, baby.
Amazon has got a green candle, but they are down 8% today because in about 5 seconds, Amazon went down 20%. $1 trillion company lost $200 billion of market cap in about 5 seconds because you know what? This is a theme for me today. Okay. Price is found at the edges of the market. So only a few people really have to be trading to determine the price. 99% of holders can just all be there along for the ride. It's that 1%, which is really determining what is the price going to do in the next moment. So there you go.
Well, as a group, look at all of the work from home stocks.
Oh, they're completely freaking wrecked.
Yeah, they're wrecked. Even relative to Bitcoin, again, like I think narratives are shifting. I think the people that are here are shifting. You know, this FOMO, euphoria, day trader mentality. The people that are still left, I don't want to say they're here for the right reasons, but they're here for the right reasons. You know, you asked me about hodl waves earlier.
Yeah,
there's been a lot of chatter about, you know, X percentage of Bitcoin not moving in the past year. I've talked about it. It's a good metric, but the problem with that metric is a lot of this Bitcoin now is put into different types of cold storage, but still used. Arcane Research did a great piece on this like weeks and weeks ago, saying like, look, it's not as bullish as it seems, but if it's a narrative that helps us, I'll take it.
Yeah. Well, you showed me that chart, and a lot of the 1 to 2 year group has increased. So people who, I guess, bought the top or started participating in 2021, early 2021, or late 2020, that group is growing, and you got compression on the near-term side. So the newest of buyers have not stuck around, I guess, but your holders are holding. So
yeah, I think that's the biggest takeaway. People aren't shying away from current price levels. They are locked in. That may change if we drop below 18.5, but as of today, as of now, there are more and more people who are saying we are in it for the long haul on a relative basis, like day over day. You know, there is less activity, less churn, I guess you could say, on a lower time frame basis, which historically is a good thing for lows. If you look at 2015, 2019,
it's common.
That changes dramatically if we drop below 18.5. So it's not like it's a leading signal, but it does help you like gauge sentiment at least, right?
So Josh, act like Bitcoin doesn't exist. How about this ETH 200 week
That's another thing, the ETH, I'm not going to use the word Ponzi-nomics. I'm not going to say that. But the issuance schedule going to zero and potentially negative, if you pull up ultrasound.money, another great spin on ETH issuance. But if you pull that up and look at it, you can see that the issuance continues to dive to zero as a APY or over annualized. And that's going to have an outsized effect on price when things eventually do turn the corner. And I think we're starting to see that. It doesn't take a lot to move this thing in a big way because of the issuance. And the thing about ETH maxis versus BTC maxis, if you're a BTC maxi, you can't look at this and not be hopeful that this is bullish, because this is the same narrative that we use as BTC maxis. It's the same narrative. It's just sped up to now versus like 2060,
Yeah.
And by the way, this could flip deflationary transactions. Again, like I said, on-chain data is muted at best. It's pretty flat, but this goes deflationary pretty quick if
people actually use the chain.
On-chain data starts to pick up. Yeah. But again, the problem is this layer 2 stuff. If people prefer layer 2 over layer 1, ETH won't have as big of a burn as it maybe otherwise would have.
Joshua, I've said this before. I'll say it again.
Yeah.
The adoption of layer 2 does not reduce total layer 1 baseline activity. Now, it may help.
I hope that's the case. I haven't seen evidence for that, but I hope that's the case.
It may help in spikes, but I think it will actually, you'll continue to see a gradual increase of layer 1 baseline fee volume, even in the dips.
I mean, that's the argument. This isn't just like an ETH argument. It's an any blockchain argument. You look at Bitcoin versus Lightning. You look at Avalanche and the C chain versus, I forget what the side chains are called there. You look at
C chain is the side chain for Avalanche. It's just the only one people use because it's
C chain is where
EVM.
the transaction fees actually have a burn mechanism.
Right.
I forget what they call it. The other chains. The other chains on top of that.
The ones people don't use.
No, they use. That's the thing. That's the issue. They use the layer 2s.
Lot. Oh yeah, because they got the crab game now.
Right.
The crab game moved.
Crabata. Look at DOT. Look at parachains versus the main chain. It's the same story. So we really have to figure out a solution to this value accrual stuff.
The example I've mentioned before, and I will express it here.
Please.
Small audience of friends. So my parallel is actually to the way organizations often grow. So let's use the example of church planting. If anybody understands that concept, you have mother.
I've never heard those two words put together.
Yes, I'm about to give it to you,
Okay,
Josh. This is alpha. This is alpha.
All right.
Typically, a church is growing, and oftentimes they'll say, all right, we're going to send out Bob the pastor to plant a church in another part of town, or like in another town 2 towns over, something like that, with the same kind of general ideologies or whatever. And they think, oh, well, some people are going to go to that church with them. And we're going to send out 10% of the church or something to go with them to plant that church. And they think it'll actually reduce the size of the parent church. And in actuality, that does not occur. Typically, the parent church continues to grow if it's already been growing. So it has the inverse effect of what you might expect. But anyway, random thing. It's not just that. It's also like if you think of the way franchising works, or like multi-location restaurants or things like that. So there's multiple sources for this, but just throwing that out there.
I think the issue is if you can live on layer 2 for everything you do, why ever go back to layer 1, right?
Because
like
there's
no like
it
upstream.
is the settlement layer. It's like your primary source. Think of all the others as like the nodes that go out and they come back into the mothership for final settlement.
Yeah, I understand that, but you just don't see. You could live on Lightning your entire life. You'd have no clue Bitcoin exists,
Yeah. I'm not trying to tell people Ethereum is like church. That's not at all what I'm saying. I'm just using
that was my takeaway.
An organizational example.
Okay. I think it's loosely fitting at best because of the value accrual piece.
Sure.
You know, I could live at the Exo Church and have no idea that the Mother Church exists, right?
And that's fine.
Okay. We'll see. I mean, it's literally playing out before our eyes. You know, we may see layer twos just take off. Optimism, Arbitrum, Matic. Matic's not really layer two. But you know, it's kind of in between.
Yeah.
That chart looks amazing to me, by the way, Matic.
Let's go look at the amazing chart.
So yeah, back to ETH. We're above the 20 week.
The 20 week,
right?
This really reminds me of that 2015 BTC grind. Really, really does.
Well, this follows along the lines of DXY too, which is inverted to this, but all this looks like it could have a leg up. Ultimately, I think it depends on what happens with the Fed. So the Fed is on the 2nd, the FOMC.
Yeah.
Midterms on the 8th, and then CPI print on the 10th. So first couple of weeks in November could be pretty interesting.
Yeah. So you like Matic because it's a gigantic Adam and Eve?
No, I just like Matic because it's making higher highs. It's off the lows. You could argue cup and handle with that, even though people would give me flack for calling a couple handle at the bottom. I don't care. I think it looks great. I think ETH BTC looks phenomenal. ETH BTC is a inverted head and shoulders on it. You know,
ETH BTC has really turned into something interesting here. Like, this chart continues to be insane, but at some point you think if it's just hitting that ceiling over and over and over again, 0.075, 0.08, whatever, you're going to get a move. I did a tweet AI thing. Did you run your handle through that?
No.
It's this service that says it uses AI to say like, hey, we're going to create tweets that you would have created.
Oh, okay.
And one of mine was like, I am selling ETH at 0.1 and there's nothing you can do to stop me, or something like that. It was along those lines. It was good. I was like, nailed it. Or 0.1 magnet. I can't remember what it was, but it was pretty good. I also had many AI tweets about DeFi. It was really pigeonholing me, but nevertheless, ETH BTC looks fantastic. BTC 200 week, not really there. 20 where that would be 23k, 24k. So I would really like, if Bitcoin got above like 24, 25, I'd be really interested because I think it could go back to the 30 plus, 30.
That's
mid-30s.
my level too. See, look at that. We could finish the year at 33k, right? You could go to your family on Thanksgiving and be happy you told them about it a year ago.
Boy.
You know?
Oh boy.
Right? Am I wrong? Like, come on, who's with me? Come on.
33k by the end of 2022. We need a better rhyme.
Sure, whatever. But no, I agree with you. The 24.
My birthday's at the end of the year.
Oh, well, happy early birthday, says Bitcoin.
33k by Ledger's birthday.
Okay, there you go. Is that too much to ask? So I agree with you. This looks like 2018. Is that what you said for ETH? Or no?
I said ETH looked like like Bitcoin in 2015, like this right here.
Oh, I don't know about that, but Bitcoin now could turn out to be Bitcoin in 2018, where we get this Adam and Eve fractal starting, it fails, and then like continues to grind higher. I can see that.
Yeah. The big narrative shift that needs to occur is that Bitcoin and Ethereum are more sound assets than other asset classes, than growth stocks, right?
Yeah, and based on what we said in the opening, you know, I think that attitude is shifting. It's shifting towards what else is out there that, you know, doesn't have poor earnings and a garbage PE and
no yield,
all these other issues that these tech stocks are having.
Theoretically, in an inflationary environment, crypto's made for that. That was a narrative for a very long time, but Bitcoin traded right alongside risk assets, inverse to yields, and only good when growth was good. The question is, can it shift the tide on that? Can we turn that into...
You could also argue it does best in both environments, because when they printed more money, it went up. When they reduced the money supply, it went down, right? But it didn't go down as much as the rest of risk on, right?
Yeah, maybe so. Scarce assets or yield generating assets seem like good asset classes to be in to me. If you can establish a scarce asset that is also yield generating and also still growing, perhaps that can be a magic asset to do very well. But you have to, that narrative has to sink in. Otherwise, like we said, the price will be determined at the margins, and that's not great. But I feel like, especially Bitcoin and Ethereum, maybe some other stuff, but the long tail of crypto seems more at risk to me than the fat tail.
Yeah, the altcoins, some of them won't ever come back.
If they don't have value accrual, they don't have yield, they aren't reducing, they're inflating like crazy still. Those seem more problematic than Bitcoin and Ethereum, which have much more like a firm foundation.
Yeah, OFAC compliant blocks up to 60-something% on ETH. Speaking of firm foundation, like no one's going to care about that until it's a problem, and then everybody's going to freak out.
Yeah.
But yeah, the chart, look, this could look worse, right?
It could look worse.
If we were making lows, it would be a completely different story. But we're not. And the fact that we're not making lows when everything else is making crazy lows on the tech side, that's huge.
Yeah. Let me holler at something here. You have the Dixie and you have a lower low. Now I did this in May. That accounted for a nice crypto bounce. So did this. So is it just one of those and continue on, or do we get a topping formation start to occur? New regime in Britain, Europe gets past the worst of expectations because of entering the winter. Is there a narrative there, Josh?
I mean, the narrative would be amazing if the Ukraine stuff quiets down or stops, then we're not on the brink of nuclear war. That's huge. But as far as DXY is concerned, there is an inverted Adam and Eve up there. That's playing out, trying to. So that's bullish for crypto. If we decide to slow our hike pace while Eurozone continues, I think that would be good for crypto because DXY would come down with it, right?
Yeah.
That Solana chart doesn't look as good.
Yeah, the daily looks okay.
But the problem with these alts is like you could be bearish on them forever, and then they have these crazy like 20% days,
Yeah.
For no reason.
50% mean reversion.
Like Doge is up because of Elon, but Doge is up like 50% over the past week. It's insane.
The king of our Twitterdom, Mr. Elon Musk. He walked in with a sink just for a play on words. I enjoyed that. I appreciated that. Let that sink in is what he said, and he brought a sink in.
I think
that is quality dad humor, though.
Extremely absurd.
Quality dad humor. Yeah, I think for Solana, you get back to $45-50. People are probably wanting to rotate those because what you have there in that scenario is you have about 6 months of underwater coins that could sell in a profit or break even or whatever.
Yeah, I mean, all these charts could be an Adam and Eve playing out. ETH may be leading the pack as a group.
There's a couple. I mean, ENS still looks. I mean, I think this chart looks freaking great. Like, it started basing a long time ago, right? So, like, Solana is ENS at $10. That's what it looks like. So, yeah, sure, maybe Solana has upside, but this has been putting in this like sideways, higher lows, equal levels. This looks constructive to me for ENS.
We talked about it a couple weeks ago. It looks like an inverted head and shoulder type fractal. Yeah. I just don't know why price would go up other than speculation.
Yeah. Somebody in the chat brought up sushi. It's another one that's been putting in this kind of like who's left to sell low. It looks very good. I mean, that's flipped the 200 day.
It's real simple. It's making a higher high. That's it, right? It might be the biggest junk in the trunk, but if you're just trading the chart, yeah, that looks good.
Do your neighborhoods in the Northeast, do they do trunk or treat where everybody meets in the same place and just like gets candy out of the trunks?
I don't think so.
It's like it's basically like a reverse parade.
Yeah. I don't think so, but I could be wrong. What's your favorite Halloween candy?
Ooh. I'm gonna go with the mini Butterfingers.
Okay.
I do not like the corn things, but I will eat them if they're in front of me.
Oh God.
I also like those like weird flaky toffee things. You know what I'm talking about? They got like stripes on them.
No.
Okay.
No, I don't.
Chat's
more
telling
like
us
an Almond Joy guy.
Almond Joy, of course you are.
Adam?
Yeah,
Adam's look good. Adam is another like value accrual question versus all these like side chains and IBC and
yeah, but somebody's been accumulating Atom for a hot minute. Like they just started buying it below $6 and just kept buying every week. It's been weird. Like Atom's kind of operated outside of the realm of others, but it's above its 200-day. Might have a 2200 cross. Like that above its 200-day, Josh. That is any coin that is above its 200-day average. Kudos.
Yeah, it looks good. It really does. The problem again, though, the on-chain activity, not really there. Not really matching. Now you could argue on-chain activity is not very valuable, but
for comparison, Avalanche is at $18, off the lows by a little, but its 200 days at $27. It has another 60% or something to go to get to its 200-day moving average. It has a 3 arrows capital problem, but not all coins are the same, is what I'm saying. Axie Infinity, $9, 200-day moving average, $19.
That is not a chart that I would touch.
Yeah, if you're this one's 4 days off its low, where others are 100 days off their low.
Yeah, that is not anything NFT metaverse related, digital culture related.
Digital culture.
Not for me. Not for me. Yeah, ETH looks great. ETH looks really good.
Yep.
ETH above 2K looks even better.
Yep. So where does this stop? Is there a test point? ETH at 2K, Bitcoin 24K, and then if it can continue, Bitcoin to 30 something, ETH to 2,500. Next level I see of like macro or not macro, large weekly time frame relevance.
Yeah, I think a lot of these markets are starting to price in optimism relative to what the Fed's going to say. I hope that doesn't let them down like it has for the past year. Like some of these moves on even legacy are very interesting.
All I'm saying is I said the 200 week is the thing for legacy, and
it's worked out.
It's worked out for the S&P.
Yeah, there isn't anything on crypto that's screaming like this is a great entry or this is some sort of mega reversal and building up. But things look much better than they had been. That's as far as I'll go, I think.
Yeah. Especially if you get some kind of move into the 30s, you could at least imagine where the bottom is in, right?
Yeah, because the real problem was the lack of volatility and being bearish. That combination historically has meant lower lows guaranteed. So the fact that we didn't decide to go lower is a really good thing.
Like you could just have this chop fest for a couple years, I mean, we did that before. 2020, 2019. 2020 was pretty brutal.
Yeah, it could be very choppy. I'm just thinking about, 2018, we saw on-chain activity pick up again. Yeah. I don't know.
We need to see the proof in the pudding. This is not us trying to get bullish. It's just us wondering, is this bounce legit?
Yeah, I think in 6, 12, 18 months, looking back on something like this, when you're saying, okay, it's at the 200 or slightly below, that historically has been a good place. When you're looking at legacy go bananas to the downside and BTC sort of ignoring it, shaking it off, that's a good thing.
Yeah. There's a lot of rotations being made too. Like Facebook legit looks like it's in a death spiral from a what is it perspective. Like
we had Jim Cramer crying on TV.
Crying, and we didn't call that bottom immediately?
That was really something.
Yeah.
That chart. Oh man.
You know what though? A Bitcoin ETF is too dangerous.
I can't talk about that, but I agree. I mean, that's a great example of a chart as a reason why you don't like catch a falling knife, you know, because sometimes you just don't know. That thing could just go right through your hand, you know?
Yeah. Put it in linear.
That is ugly. Ugly. It's a win for if you're truly like long metaverse, like over a multi-decade time frame. That's a win for the metaverse because that means, you know, Meta doesn't have a handle on it, right?
Meta is 136% away from its 200-day moving average.
That just looks tragic.
I would really...
I mean, Netflix even turned a corner, you know, with their subscriber count.
It would be a 90% jump for Meta to get back to its 2013 like kind of initial IPO type levels. Be another 66% down from here. God, that would be fun. Imagine the cope. Especially if it did that while the rest of the market actually was recovering. Should we talk about Twitter?
I mean, we can. Well, we can. It's going to be delisted everywhere.
It's going to be delisted, but it's finishing right where it started. $50. How disappointing of a stock life. Like, this is a random walk of a stock if I ever saw one.
Yeah, it is pretty random. You know, I hope the bots get cleaned up. I hope Twitter gets better. I've certainly pulled away from Twitter over the past couple of years because of the bot problem.
Binance put in 500 million. Did you see that?
I did. There's some rumors of involvement regarding potential partnerships down the road.
Yeah. Google at the 200-week moving average. These are the dips I'd be looking to buy, right? Take the companies that are legitimately highly moated and profitable. If you're looking at growth, at least.
If you're looking at technicals, I think they're fine. If you're looking at like PE ratios or Microsoft is another one that just looks overvalued based on, you know, historic numbers.
Yeah. So that's the market.
So yeah, I like where we sit. I like that sentiment still seems fairly bearish on what I can see. It also feels like nobody's here, which is good.
Jason Bourne in the chat asked, why does my shirt match my curtains? This is slightly different green. Come on. My shirt is I don't know what color. This is not my favorite shirt, but it's a shirt. Don't judge. It's in the closet. I put it on. There's nothing else. It's just a serious note. Gold is still 1650. It's just permanently. Yields up a little bit today, but down over the last last week, rather. These need to get themselves under control. None of this can be long term if those don't chill.
Yeah, I think the bond bid-ask spread is more critical than the yield.
Yeah.
Because if we don't have some foundation of normalcy, then everything just explodes, you know? So right. I agree. We need bonds to like get their stuff figured out. We need the Fed to figure out what's going on there.
Continues to be the worst year in a generation for the 60-40 portfolio.
Which again is good for crypto. That says, hey, there's other options out there that aren't
Yeah.
just so obvious.
Yeah, it says we don't like this system. Screw you. So maybe crypto has a shot there.
Well, it does say the trust in the system is
Low.
probably gone or wavering, you know, at the very least.
That's a good point. That's actually what it means. Because when you're investing in those, you're saying, I trust this. It's a very good point. I like that, Josh. That's a maxi argument I can really get on board with.
Well, I mean, yeah, how could you defend that performance? You know, the worst on record.
Yeah. Do they really deserve trust?
You could argue that the forward outlook is positive because the past has been so negative, you know, recently. But I don't know if that's a legit argument anymore.
Yeah.
The thesis has changed, right? This is a thesis changing year for the 60/40 for bonds in general.
Will we enter the Bitcoin standard?
I mean, we could. We've seen a ton of institutional, not onboarding, but just, you know, building the tracks for onboarding, whether it's Fidelity, Coinbase, Aladdin, BlackRock, all these guys, which is definitely a good thing.
Yeah. All right.
I don't really have anything else. There's some so rare NFT thing I was going to ask you about. Any thoughts on that?
Yeah, they're doing So Rare's got all these big sports partnerships. So I kind of like them because they're onboarding, like trying to find these real life use cases with sports and communities and stuff. So I think that's pretty cool what they're doing. Nothing huge other than that. Check out flip.xyz. I'm going to be in San Francisco if anybody wants to meet me. I'm emceeing Zero Expo by the Zero X Project. Andrew Yang is going to be out there, a bunch of other folks. It's a one-day event for free during San Francisco Blockchain Week, and it's on Thursday. So if y'all want to come, I'll be there. I'll MC the conference. I'll be the MC of some sort. I find out the day before, like, what I'm actually saying. I don't know. Yeah, but I'm going to be out there, and I'd love to say hello if you're going to be there, if you're in the region. Thanks for joining us. It's a pleasure. Follow Josh at Carpe Noctem, where he tweets less now than ever before.
It's straight alpha now. You know, there's no other.
Nothing but up. Just hitting you straight with the content.
Right down the pipe. Straight alpha.
That's right. All right. Sorry for keeping the show a little short. I got to be somewhere in 17 minutes, but thank you for joining us, and we'll catch you next time. Go to flip.xyz.
Monuments crumble in the blink of an eye. The easy river has just run dry. In a house of cards, I feel the breeze, wound so tight I can barely breathe. Oh, the change